Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a strong start, tracking cues from a buoyant Wall Street. Bloomberg reports that the government may ask state-run companies to buy back shares worth as much as 20,000 crore rupees in order to meet its stiff divestment target. Infosys reported an inline set of numbers for the second quarter. Margins, though, were below estimates despite a weak rupee. And MOTO Corp too met analyst estimates in the second quarter. High commodity costs impacted the two-wheeler makers' margins. And index heavyweight Reliance Industries will be reporting its second quarter earnings today. Focus will be on commentary over Jio and its expansion plans going ahead. Let's talk about the US markets, and they closed significantly higher on Tuesday, with the Dow Jones Industrial Average rallying nearly 550 points on upbeat earnings and robust economic data, marking the biggest one-day percentage gain for major indices since late March. Meanwhile, the market has also been closely watching negotiations between the European Union and Britain as it attempts to exit from the trade bloc with a trade agreement in hand. Abigail Doolittle of Bloomberg News wraps up all the action on Wall Street in this report.
Stocks surged in Tuesday's Wall Street session. In fact, it was the best day for the major averages since the end of March. Both the Dow and the S&P 500 rose by about 2.2%. The tech-heavy Nasdaq outperformed, up 2.9%. Not surprisingly, then, the best sector on the day was technology, up 3%. But it was such a bullish day, all 11 of the S&P 500 sectors did finish higher, in fact, by 0.9% or more. So very strong breadth there. As for some of the tech winners, the leaders included Apple and Microsoft, both up more than 2%, while Adobe Systems, a software company, up 9.5% on a strong third quarter report, along with guidance or an growth outlook for 2019 that topped estimates. As for another strong sector on the day, healthcare up nearly 3%, its best day since November of 2016. Some earnings winners there, including United Health along with J&J, while we had some of the biotech companies snap back, rebounding. Both Gilead Sciences and Amgen, big boost to that healthcare sector. And after the bell, Netflix, the big story, those shares absolutely surging after the company crushed estimates both from a subscriber standpoint and earnings for the third quarter. They also raised the fourth quarter view. After the bell, the trading action up about 17%. If those gains should hold to the end of Wednesday's close, it would be the best day in more than 2 years. As for Tuesday's close, it was certainly risk on, with stocks shooting sharply higher. In New York, Abigail Doolittle, Bloomberg News.
All right, well, that's the picture that came in from yesterday's session of the US markets. And that's pretty much the picture as it stands in early trade in Asia as well. And now we were looking at the early risers. That's the three early risers. That's the Nikkei in Japan and the Australian benchmark, as well as the Kospi in South Korea. And all of them had gains of over 1% in early trade. In fact, the Nikkei had gains of over 1.5%. It's currently trading with gains of 1.7%. The Chinese benchmarks have just about opened up, and they've opened with strong gains as well, over 1% each for the two of them. And the Hang Seng just about, we're not really getting any updates on the Hang Seng yet, but we'll get you them once we do. But as of now, it seems like it's going to be a positive day of trade for the Asian markets as well. But as of now, Agam is here to tell you more about what to look forward to in trade today and all that's happening in the futures and options space. Agam, it looks like the cues are positive. The SGX Nifty indicating a positive start as well. Again, focus on earnings.
Absolutely. It is going to be all about earnings. We're going to have the reactions for MOTO Corp as well as Infosys in today's day of trade. That said, as Alex has already spoken about, the SGX Nifty is taking cues from the other Asian peers, and it is seeing an advance of around 99 points. So a possibility of a 100-point up move, or at least as far as the opening is concerned. How did our markets fare yesterday? Well, very well, in fact. We did see the Nifty advance with both the small cap and the mid cap indices outperforming the Nifty. Moving on in terms of the banking indices too, we did see a lot of strength specifically in the PSU banking index. Two other sectors that I want to talk about, Nifty Auto Index and the Nifty IT Index, both advancing in trade. Can the Infosys push the Nifty IT index upwards. Well, that's a wait and watch. But when it comes to the areas at this point in time, of course, the Infosys stands out considering its earnings came out yesterday. It was the biggest gainer when it comes to the American depository receipts. And among other counters, when it comes to ADRs, we've seen strength in the likes of Wipro and HDFC Bank along with Vedanta too. But let's take a look at foreign institutional flows. Well, they were net sellers. Well over 1,100 crores were pulled out. On the other hand, DI is putting in another 1,051 crores on net basis. But among other cues, we do have Reliance Industries, which is going to announce its earnings today. Well, that advanced yesterday. ICICI Bank, HDFC, some of the other heavyweights pulling up the Nifty. Can we expect that strength to continue in today's job trade? Well, that is something we are going to have to see. But HDFC, Indiabulls Housing Finance, and Infosys bearing down to a certain extent on the index. Let's take a look at the futures and options space then. And futures, again, fresh longs coming in for the Nifty. For the banking index, we did see a short covering coming along, considering a 2% decline in OI. And among others, we're keeping an eye on levels such as the 11,000 mark, considering that will see substantial resistance, considering the open interest there. But when it comes to some of the other variables, we do have the most activity around the 10,500 mark. As you can see, more writing along the put, considering the Nifty moved up. And of course, in terms of other factors, India Volatility Index also declined by as much as 8% to around 17.4. Now, we do have the put-call ratio, well, largely around the same levels, around 1.24 for the Nifty, and for the Nifty Banking Index, well, at around 1.19. In terms of stocks, we're talking about MCX, fresh longs coming in, considering the stock moved up around 10%. And among others, we do have Diwan Housing Finance, which did see some weakness coming in, and the shorts building up there. We have longs in Federal Bank with an 8.5% increase in open interest, and finally Chennai Petro, where we also saw strength coming in, not only in Chennai Petro, along with the rest of the oil and gas space. Well, fresh longs there. So overall, Alex, it does seem like we're seeing an extension of the kind of gains that we saw yesterday. Well, to what extent, that is something the opening will tell us.
All right. So we could be setting up for the fourth straight session of gains for the benchmarks at least. Thanks so much for that, Agam. Let's talk about the other two markets as well, the rupee and the bond markets. They, in fact, had a positive session yesterday as well. They gained, the bond prices as well gained, after India's trade deficit narrowed to a 5-month low due to slower import growth. Easing crude oil prices and softer consumer price inflation have reduced policy tightening expectations as well. So, two successive open market operations and expectations of further such purchase also aided sentiment. The rupee closed at a 2-week high, while the 10-year bond yield fell for the 5th consecutive session to hit a 3-week low. Let's shift focus now and speak about commodities. Jayesh Khilnani is joining in with all the updates there. Jayesh, what are you picking up?
Morning, Alex. Let's start off with oil prices, which have seen some bit of positive bias for the 4th consecutive session. That is on the back of positive inventory data. Contrary to what the analysts were expecting, the US has in fact reported an inventory decline of about 2.13 million barrels for last week as per API data. That led to the positive cues that came in for the oil markets. But as far as OPEC is concerned, the Indian oil minister has said that OPEC has not risen the output that we have seen in the market. Shifting focus to the base metal space, the index itself closed lower for the 2nd straight day on the back of US President Donald Trump hinting at more tariffs against China. So as far as individual base metals are concerned, we had copper, which posted the biggest decline in more than a week. On the back of inventory data, the LME copper inventory rose for the first time since September 21st, and we had the LME aluminium inventory also, which rose 7.6%. That was the most since Feb this year. Lastly, talking about gold prices, we have seen some bit of upward bias for gold prices. That, however, seems to be softening because gold is trading lower after rising for 2 consecutive sessions.
All right. Thanks so much for that, Jayesh. On to earnings now, and there's a lot to talk about in this space. Infosys, starting with Infosys, it maintained its full-year guidance backed by strong client addition for the 2nd quarter. The company's margins, though, came in below analyst estimates. despite a weak rupee. Agam Vakil is here to tell you all the key numbers and also to speak about the outlook and why the margins were lower than expected. Agam, what are you picking up here?
Well, when it comes to earnings for Infosys in the second quarter, it's largely in line, no fireworks here, except for the fact that there's been a little bit of a miss when it comes to margins. So let me take you through the numbers then. First, revenues rose around 4.2%, and this is on constant currency basis. And this was certainly ahead of street expectations when it comes to dollar revenues, or for that matter, your income in rupees. Your margins did come off, but they didn't come off. They were flat at around 23.7% sequentially, but lower than the expectations of over 24%. So again, that's a miss there, and that's the reason why we've seen profits, come in line at, a little over 4,400 crores, as a 4,100 crores, as you can see on your screen there. But they did rise as much as nearly 14% on a quarter-on-quarter. Among the other key factors I want to talk about is, of course, margins. And as the CFO did suggest that when it comes to margins, the advantages that came because of the rupee depreciation were countered by higher compensations as well as higher subcontractor costs, because of which margins remain flat. That said, they have maintained the guidance, and some analysts on the street are expecting a revision, an upward revision of the margins guidance, but that hasn't come to be. But it's still at around 22 to 24%, and they continue to hold their margins within the guided band. The company also signed large deals worth well over nearly $2 billion for this particular quarter, and that is something that could see the company carry the revenues forward. That said, the CFO, the CEO has also said that such large deal wins could be lumpy as we move into the next year. And key verticals and key geographies, we did see strength in both North America as well as the financial services space. So on the whole, nothing to worry about that there, according to the management. But on the whole, it's been a fairly stable quarter. While there has been a miss on margins, it's profit in line with street expectations. And that said, of course, we also spoke to Ranganath, the CFO of Infosys, and this is what he had to say.
If you look at last 18 years, we have seen multiple business cycles. We used to grow at 100% when I joined, 100% year on year. Then became 30%, then became under 10%. In the last 3 years, we have gone, and this year, we have had a good performance. If you look at fiscal 16, we grew more than the industry, right, at 13%. I think it's a business cycle, and at the same time, when the sectoral things are positive, I think we also have to execute well and move forward.
And what are the key challenges which awaits for Infosys? You have been facing attrition issue as well, and how much headroom do you have to Infosys has to counter growth issues or currency fluctuation?
I think currency is something we have to navigate and we have to manage. I'm very proud of the fact that in each of the 12 quarters of the last 3 years, we have had a very volatile currency environment. We had Brexit, we had US elections, and so many things. We were able to navigate that effortlessly, of course, through appropriate hedging strategies. I don't think, hedging per se is rather the currency volatility per se is a challenge. I think company has sufficient expertise in navigating that. And coming to attrition, of course, if it's not just us, several of our peers have had attrition. And attrition, of course, is one of the prime areas. As I said, that's one of the reasons why we invested this quarter to address some part of the attrition, especially in certain pockets. At the same time, compensations and the variable pay. And in a high demand environment, we do see attrition spiking at certain intervals.
All right, that's a word coming in from the Infosys management. We also had Hero MotoCorp reporting numbers yesterday, and they met earnings expectations even as higher commodity costs hurt margins. Yatin Mota has the key takeaways in this report.
Hero MotoCorp's second quarter earnings were more or less in line with the street expectations. Now, if you look at the revenues, they came in at close to 9,100 crores. That was a growth of nearly 8.5%. Slightly better than the street expectations. However, if you look at the profits and EBITDA, they came in broadly in line with the street expectations. Profits stood at close to 976 crores, and EBITDA stood at 1378 crores, down by nearly 5%. Margins also, we were expecting it to be close to 15.4, 15.5%. They came in at 15.2% versus a level of 17.4% on a year-on-year basis. And this drop in EBITDA margins is largely to do with two factors. Number one is the higher commodity cost and raw material cost. In fact, in the quarter, the raw material cost or the raw material consumed as a percentage of overall sales stood at 70.4% versus a level of 67.3%. So almost a 3 percentage points jump in the raw material cost. Not only that, we had the phasing out of the Haridwar plant tax benefits because of the GST implementations, and because of that, on a year-on-year basis, the overall profitability has come down. However, if you look at the management commentary, it has been strong. They believe that despite the cost challenges, they are expecting the volume momentum to sustain moving forward, especially with the start of the festive season, and because of that and higher volumes, we could see the profitability improve for Hero MotoCorp.
All right, but today's center and focus is going to be index heavyweight Reliance Industries, which will report its earnings for the second quarter. Profit for Reliance Industries is expected to grow, with the petrochemicals business making up for the moderation in the refining segment. Samit Sarkar is joining us now with all the key aspects that you have to watch out for in the Reliance earnings. Some of the key numbers first.
Well, if you see the headline numbers for Reliance Industries, now the revenue is expected to be higher by around 8%, while the EBITDA is expected to grow by only 1.6%. Now, this would lead to a 100 basis points contraction in the EBITDA margins of the company. Now, the net profit, now that is expected to remain largely flat at close to around 8,853 crore rupees for Reliance Industries, and this could be the slowest net profit growth for the company in the last 15 quarters. Now, on the operational side, the company's gross refining margin is expected to decline to around $10 per barrel. This is despite the fact that Singapore gross refining margin, that is the Asian benchmark, that averaged at around $6.1 per barrel as against $6 per barrel in the last quarter. Now, lower gross refining margins coupled with lower volumes will impact the company's refining business in the second quarter of financial year 2019. Now, gross refining margins and refining volumes are expected to remain weak due to the plant shutdown that was witnessed during the second quarter. Now, for petrochemical segment, it is expected to be yet another record quarter on the back of rising volumes and product spreads. Now, volume growth would be on the back of ramping up of new capacities, while spread strength will be on the back of the ethane imports that the company is doing in the second quarter. Now, rupee weakness, that is expected to benefit the core energy business of the company, but would also result into a higher interest cost for Reliance Industries in the second quarter of financial year 2019. Now, a couple of things to watch out for in the standalone business would include the management commentary on progress of the remaining core projects and the future capital expenditure plans of the company.
Well, absolutely. Those are the key numbers, Samit, but in recent times, a big amount of focus has been given to Reliance Jio. What are the expectations there?
From the telecom business of Reliance Industries, if you see, revenue is expected to be higher by around 12% for Reliance Jio, while the EBITDA is expected to grow nearly 16%. Now, margins on that would expand by around 100 basis points to close to 40%, while the net profit is expected to be higher by around 21%. Now, average revenue per user, that is expected to decline for the fourth consecutive quarter to around 132 rupees. Now, ARPUs are expected to decline because of Jio phone users that are coming at lower plans, which would dilute the total ARPU of the company. Now, revenue and net profit is expected to rise on the back of strong subscriber additions seen by Reliance Jio in the second quarter of financial year 2019. Now, increase in fuel prices could put some pressure on the network cost for the telecom operator, while rupee depreciation is again expected to increase the finance cost for Reliance Jio. Lastly, key things to watch out for from the Jio earnings would be the updates on the progress of broadband segment and the DTH business, updates on Jio phone subscribers, trend in the utilization of postpaid plans, and the capital expenditure plans for the second half of financial year 2019 would be key things to watch out for from the Jio earnings.
All right, thanks so much, Samit, for that comprehensive view of what to expect with regard to Reliance. But let's move on now and talk about the stocks in news. Shraddha Babla is joining us with all the stocks that you have to watch out for in trade today. Good morning, Shraddha. What's on your list today?
Good morning, Alex. First up on the list is Mahindra CIE Auto, which reported Q2 numbers yesterday. Good set of numbers. Revenue growth of nearly 22%. Net profit jumped by a sharp 74%. And EBITDA margins also saw an expansion about 140 basis points to 12.3%. For CRISIL, the revenue growth was 4%, while net profit profit growth was 29%. That's largely on account of the other income component, because if you look at the operational performance, EBITDA was up just about 3%. You also have Shakti Pumps, a very strong set of numbers. Revenues have nearly doubled for the quarter. Net profit has grown threefold to 9.3 crores, but that's of course on a lower base. Even in terms of EBITDA, that is up about 90%, slightly lower than the revenue growth. So the margins have come down by 90 basis points. That apart, you also have IIFL Holdings, which will be in focus. Now, the company's wealth management arm has acquired a Chennai-based portfolio management company called Wealth Advisors India for 253 crores. They said that this acquisition will help increase the client base in not only in India but also outside, and it will also expand the business in South India. So that's one stock to watch out for. They've also said that their subsidiary IIFL Home Finance has raised 1,000 crores via the refinancing window of NHB, and also another $50 million from SBI, through the ECB route. So watch out for this name. You also have Lemon Tree Hotels, which has signed a licensed property for a 70-room property in Mumbai, and this hotel is expected to be operational by June 2019. You have Cochin Shipyard, which has said they will buy back shares aggregating to 200 crores. The buyback price has been fixed at 455. That's a 14% premium to yesterday's closing price. Lakshmi Machine Works, on the other hand, will consider a share buyback on October 22nd. And finally, you have Federal Mughal, which the open offer for about 25% capital will be offered to public at 420 per share. This is close to yesterday's closing price, and of course, this open offer has been made by acquirer Tenneco. So those are some of the stocks to watch out for, a lot of smaller names.
Absolutely. Thanks, Shraddha. Well, there's clearly lots to talk about over the course of the day. You'll find all the live market action right here on Bloomberg Quint Live, and of course all the updates with regard to the stocks that Shraddha just mentioned. Just look on the website and you'll find everything there. But you'll also find several stories that are currently up and that you should consider reading. The government has raised the interest rate for General Provident Fund and other related schemes by 40 basis points to 8% for the October-December quarter. The rate is in line with that offered by the Public Provident Fund. In international news, U.S. Secretary of State Michael Pompeo arrived in Saudi Arabia this morning as the kingdom remains under pressure to explain the disappearance of writer Jamal Khashoggi after entering its embassy in Turkey. Media reports suggest that authorities in Riyadh are considering saying that the journalist died in an interrogation that went wrong. Ever since this emerged, crude oil prices have been under pressure. We've already given you an update as to where they stand currently. And here's a special report. I'm sure some of you have wondered, before being picked by Elon Musk to go on a rocket around the moon, or to the moon rather, what was Japanese billionaire Yusaku Maezawa up to? His 20-year-old company Zozo Clothing is now using unique sensor technology to revolutionize the way people shop online for their clothes. Here's how. Well, that's all we have for you in this edition of Daybreak. Up next is all you need to know, so do stay tuned.